We have a lot to cover this week in the SoCal Multifamily Sales Pulse, so let's get started. This week in what's happening in the market and what it means to you. Historical data of recessions and interest rate increases. Historical data shows a rise in interest rates of more than 2.5 percentage points above the previous cycle average level typically triggers a recession. It takes around 3 years from the first Fed hike to enter a recession, according to 70 years of data on rate increasing cycles crunched by Deutsche Bank. The near zero rates of the past 5 years mean that once short-term rates rise above 2.5% to 2.75%, a mild recession is likely to occur. If interest rates were to rise above the 2.5 to 2.75% range in 2023, particularly if inflation expectations begin to fall, then there would be a pronounced impact on the economy. The Fed doesn't believe interest rates need to rise above the 2.5 to 2.75% level, but many economists do. Let's take a look at the interest rates today and what they were 6 months ago and see where rates are in relation to the 2.5 to 2.75% rate increase and the corresponding effect it will have on the economy. Okay, let's look at the corresponding rate increases over the last 6 months. For the Fannie Mae single family owner occupant, the current rate is 4.875, and 6 months ago it was 2.82%. So that's a 2.05% increase. And looking at the 2 to 4 unit non-owner occupant, which is investor financing, the current rate is 5.99%. 6 months ago it was at 3.5%. Which is a 2.49% increase. So it's already gone up almost a half a point. And then the 5+ units, which is investor commercial financing, the current rate is 4.39%. 6 months ago, it was at 2.5%. And that's a 1.89% increase. So with current interest rates already having increased 2 to 2.5%, the expectations are growing that the U.S. central bank will hike interest rates by a whopping 3 percentage points this year. Since we've already seen those rates increase over the last 6 months, and with interest rates expected to increase by a total of 3% this year, you can see the history indicates we will have a recession sometime in 2023. Let me know what you think. Post a comment at the bottom of this page. All right, for this week's Pulse of the Market, an expected inventory increase again last week. Sellers are putting their property on the market, hoping to take advantage of the last bits of the hot market that we experienced over the last couple of years. We're starting to see an increase in the number of price reductions and deals coming back on the market as buyers get cold feet or can't qualify at the higher interest rates. And what to expect. We should see the current seller's market move to a little bit more of a buyer's market as we move through the rest of 2022. This will hopefully give more balance to the market. Inventory should continue to increase, which should contribute to the balance of the market. There will still be a strong demand for SoCal multifamily properties as it remains a solid investment. We should also see some of the inexperienced syndicators leave the market as profit margins get squeezed. Okay, let's take a look at the Orange County monthly stats. The monthly absorption rate went from 2.18% or months to 2.37 months. And so there was an increase there. Overall, just about everywhere in Southern California saw an increase in their absorption rates. Looking at the Orange County monthly charts, the days to sell average remained the same as the previous month at just 22 days. And the number of active listings has seen an increase over the last 2 months. And the number of new listings per month is basically just about the same as last month, with 91 new listings. The average price per square foot dropped for the second consecutive month, and it actually was increasing over the last or previous 6 months. And the number of sales last month increased, although it's continued its trend of up and down each month over the past 12 months. Okay, let's take a look at the monthly charts for Long Beach. Long Beach monthly absorption rate moved up from 2.6 months previously to 3.18 months currently. And looking at the monthly charts, the days to sell average is at 31 days, and that is up, but still pretty low, a pretty low time frame for on average. The number of active listings is moved up and has been up about over the last 4 months. It's on a rise. And the new listings last month also increasing, and this is up over the last 2 months and is more in line with some of the previous points in most years. The average price per square foot is down from the previous month, but still holding the overall trend upward as we've seen over the last year and a half. And the number of monthly sales is down just slightly over the last couple of months, but still relatively within the relatively normal range throughout the year, although it is on the normal side of or the lower side of the range. Okay, looking at the monthly absorption rate for Los Angeles County, it was 3.48 months previously. It's currently at 3.9 months. And looking at the monthly stats, the days to sell average dropped again now 3 months in a row. It's fallen, so a lot of strong demand for Los Angeles County multifamily. It's at the tied with the second lowest days to sell average ever at 39 days. The number of active listings is steadily increased, still not at an all-time high, but has increased over the last 3 months. And the number of new listings was down just slightly from the previous month, but almost directly in line with the last 3 months of new listings. The average price per square foot continued its steady increase monthly and is now at $517 per square foot. The number of sales was down for the second consecutive month. And that's not due to lack of inventory. I'm not sure what's actually causing that. Could be less demand from investors, but it's not down all that much. So we have to be able to see a trend over a longer period of time to be able to determine if there's lack of interest there. All right, looking at the San Diego County multifamily monthly absorption rate went from 1.393 months previously to 2.25 months currently. So there's an upward trend there also. The monthly stats, the days to sell average was up from 11 days, which was the all-time low, up to 19 days, which is still extremely low for a number of days on our days to sell average. The number of active listings held steady over the last month, and it's still in the upward portion of the stats. So we're not seeing a bunch of new listings, but still seeing an increase in activity. And new listings dropped quite a bit from the previous month and has been on a downward trend over the last couple of months. It's still on an average roughly in the middle of the stat points for this type of activity. The price per square foot is up slightly over the last month, but still on the increase. And the number of sales was down last month. San Diego County typically has a lot of activity, but it was down last month. Not a whole lot, but and still, again, within the normal range. But if we look at the previous months or years for the summer markets, we would see hopefully stronger activity at this point in the year. Looking at the Riverside County stats, the monthly absorption rate was twice as high as the previous month. It was 2 months previously, and now it's at 4.18 months. So quite a bit of an increase. Looking at the monthly charts for activity, the days to sell average was down slightly and still pretty close to the all-time low of 28 days. It was at 33 days. The number of active listings up slightly over the last couple of months, still at a fairly low point for the historically for the county of Riverside. And the new listings was down after being up last month, down the prior month. So there's been a lot of up and down movement with listings monthly, new listings monthly in Riverside. The average price per square foot dropped last month, and it's kind of back in the overall the trend for the majority or the average for price per square foot in Riverside. Number of sales per month dropped to 22, and that is the second lowest in relation to number of sales. The lowest was in 19 back a couple of years ago, and then during the COVID-19 time period, there was they were lower than that, but that was influenced, of course, by the COVID. Okay, let's look at San Bernardino County. San Bernardino County monthly absorption rate increased from 1.81 months previously and is currently at 2.62 months. So pretty significant increase, almost a full month of inventory increase. Looking at the monthly charts, the days to sell average is down at its second lowest overall. The previous low was 25. It's this month it's 29. The number of active listings, slight increase from the previous month, but still quite low. And drop of inventory over the last couple of years has been the trend. The number of new listings monthly was up after being at 61 the previous 2 months. The number of new listings is back up to 73, and the average price per square foot same as last month, but still kind of holding its upward trend. The number of sales was down quite a bit from last month, but still on the overall average for number of sales over the last few years, 3-4 years. So 40 monthly sales. So that wraps up another week of the SoCal Multifamily Sales Pulse. You can look at all the closed sales, weekly stats, and monthly charts in detail in the full report on my website, MikeLembeck.com. And as always, feel free to give me a call or send me an email with any questions on the market. And give me a call if you'd like an analysis done on your property to help determine your equity position for a potential sale or 1031 exchange. Many of the investors we work with stress about what to buy if they were to sell at the top of the market. What we do is we find them off-market deals so they can achieve higher returns than they are currently receiving now. All right, that's it for now. See you next week.